Hi everybody, welcome to the webinar, 7 Things Every First Home Buyer Must Know. So I've actually put together a slightly shorter version of the presentation for those that weren't able to attend on the night. It obviously went a little bit longer on the night with questions and so forth, but I've just put this shorter version together so hopefully you can still get some value and some useful information from the webinar. So I'll just work through the presentation as we did on the night. Okay. All right, so the webinar is designed to try and just take some of the stress and confusion out of the process as to how to buy your first home. So we certainly understand that a lot of first home buyers don't really know where to start, who to talk to. There's a lot of foreign, language and jargon, things you don't deal with on a daily basis. So hopefully this will answer some of those questions for you and just give you a bit more insight as to what's required and the process to try and follow. So just a quick disclaimer, just take the information as general information only. So it's certainly not personal advice. Don't go out and act on any of the information tomorrow. You need to get advice based on your individual circumstances. There's quite a few moving parts and a few variables to some of the stuff that that I'll cover tonight, but it is just general information only. So what I'll start with, there's just a question there. So do you think buying your first home is harder today than it was 30 odd years ago? So there's not really a right or wrong answer to that. It was just, a question we posed on the night with regards to what people's opinion was. So I'll bring an article in there. It's probably not super easy to read, but it's an article from a Sydney newspaper back in I think it was around 1986. So you can see from the headline, home buyers hit for six. The first sentence, I think it says Sydney's real estate boom has priced first home buyers out of the market. So whether it was harder back in the 80s to buy your first home compared to today, I don't really know the answer to that, I guess, but the moral of the story is that it's never been easy. So even back then, according to this article, it was certainly difficult to buy your first home. And we understand that today it's certainly not easy to get your foot on the property ladder in that first home. So just what we're going to cover in tonight's webinar. So the 7 main topics that we'll work through and touch on. So we'll touch on the minimum deposit required to purchase your first home. How your credit rating can impact your borrowing capacity with regards to obviously qualifying for a home loan. We'll touch on the difference between fixed and variable rate loans. So we won't get too technical there, but we'll just touch on some of the pros and cons of the different types of home loans. Leveraging guarantor loans and how you can actually buy your first home without having a deposit. Who else you need when buying a property, what other professionals that you need to engage or work with, some current government grants that are available to first home buyers, and to finish with why even bother buying your first home. Okay, so minimum deposit required. So most first home buyers we speak with, to be honest, find this the most challenging part. So quite often being able to make the repayments on a home loan are okay. They might not be too different to what you're paying in rent, but being able to save that deposit can be difficult if you're paying rent, obviously cost of living, bills if you're living out of home. It's difficult to pay all your living expenses and also to be able to save a deposit as well. So as you can see there, in a perfect world, you'd have a 20% deposit. So 20% is, I guess, often the bank's sweet spot. So if you had a 20% deposit and then you take out a home loan for the other 80%. But in reality, it's probably not realistic for most first home buyers to be able to save a full 20% deposit because it's a large sum of money. So as you can see, the second point there, it does depend on the property price. But what I often say is if you had to say a 7 or 8% deposit, so 7 to 8% of the property value, then that should be pretty close to be able to have a look at a few options and would be enough as a bare minimum deposit. We will talk a little bit more on deposits later in the presentation. I've just noted there in brackets that's without any government assistance or any schemes. So, I guess 7 to 8% as a bare minimum under normal circumstances. How your credit rating can impact you. So it's best to try to avoid having multiple inquiries on your credit file. So say if you applied for a couple of credit cards, you had a car loan, maybe took out a personal loan to go on a holiday once COVID allowed us to do that. Maybe a Zip Pay account, they're quite popular these days. If you have multiple inquiries on your credit file, certainly over a short period of time, it can have an impact on your ability to get a home loan. So it's certainly not a black mark, but it just opens up a few questions from the bank's perspective as to how you manage your money, why you're applying for sort of so many different loans over a period of time. So if you can avoid that, great. Understand that sometimes you do need those types of loans as well. So just to give you an example, I did a sort of a quick scenario, and again, just use this as a very rough guide, but I did, if there was a young couple with no dependent children, a combined income of 140,000, so say they're on 70,000 each, with no other loans or credit cards at all, depending on living expenses, of course, they could potentially borrow up to around maybe 650,000. And I did the exact same scenario. So same couple, same income, but each person had a $5,000 credit card. And then they also had a car loan with repayments at $400 per month each on the car loan. So based on that circumstance, it actually showed potential borrowing capacity reduced to around maybe 500,000. So as you can see, $150,000 difference in home loan borrowing capacity when you've got, a credit card and a car loan. But certainly understand not everybody can buy a car with cash or with savings. So car loans are often a required finance or required item. But just to give you an idea that it can have a big impact on your borrowing capacity, those other sort of loans or facilities. So fixed and variable rate home loans. As I mentioned, we sort of won't get too technical with these. This is something we really talk through in a lot more detail with clients sort of on a one-on-one basis, depending on what their circumstances are. But just to give you a bit of an overview, there's basically two types of home loans. So there's fixed rate home loans and then there's variable rate home loans. So with the variable rates, as the name suggests, the rate is variable. So the interest rate and therefore your repayments can vary depending on what happens with interest rates. If the Reserve Bank changes rates or the bank changes rates, then your home loan does change in line with that, up or down. So one of the advantages of variable rate loans is that they are a lot more flexible. So they don't have any restrictions on additional repayments onto the loan. So if one of your, goals or plans were to sort of pay over and above the minimum repayments, then being able to do that on variable rate loans with no restriction, they allow you to do that. And then most of them will also have either an offset account or a redraw, where any of those extra repayments you've put onto your loan, you can actually redraw them back off if you ever needed to for whatever reason. So a little bit more flexible with regards to repayment terms. So yeah, on the flip side to that, there's the fixed rates. So again, as the name suggests, the interest rate would be fixed in, so locked in, and it's normally anywhere between 1 to 5 years. So you can sort of choose what term you might want to fix it for. The rate would generally be different depending on what period of time, but really good for somebody that just wants that certainty or peace of mind on what your mortgage is going to be. So say you did a fixed rate for 3 years, that'll be your mortgage repayment for the next 3 years. It doesn't matter what interest rates do. You'd have that certainty and peace of mind that that's what your mortgage repayments are going to be. Yeah, so again, a little bit less flexible in that most fixed rates have restrictions on extra payments, so you can't put unlimited extra money onto your mortgage. And then also most of them won't have a redraw. So if you do put, I don't know, an extra $1,000 or an extra couple of $1,000 onto your mortgage, but it's a fixed rate, generally you won't be able to redraw that money back until your fixed rate finishes. So say at the end of the 2-year or the 3-year period. So yeah, just a little bit less flexible, but as I said, it really depends on your individual circumstances as to what might suit you best for that. Okay, so moving right along. So it's quite, often sparks a bit of interest, this one, but how you can actually buy your first home without having a deposit. So in simple terms, you should always, but as the first point there says, be nice to your parents or family. So basically the way this can work is it's a guarantor home loan or a family guarantor loan. So effectively the way it works is if you've got parents, well, it's normally parents or immediate family that say either own their own home outright or have a large amount of equity in it or maybe own an investment property, they can effectively go guarantor and use their property as the deposit for you in basic terms. So that would mean is if you wanted to buy an apartment or your first home for $500,000, you can actually take out a home loan for the full amount. So borrow $500,000. So you don't need any savings or any cash deposit. As long as you comfortably can make the repayments, there's no actual deposit required in regards to a cash savings. So yeah, a little bit more complex. Definitely need to talk through what the obligations are for these types of loans, understand the risks from the guarantor side of things. But yeah, it can be a really good way if parents are wanting to help your kids into the market, struggling to save enough deposit to do it on their own, then going guarantor is is one way to help you into that first home. And the other thing, the guarantors are certainly not locked in for the whole duration of the home loan. It might be, 2, 3, 4, 5 years. It really depends on once the property, again, don't want to get too technical, but once the property gets to an 80% loan to value ratio, then effectively we can fill out some forms and the guarantor can be taken out of the equation. So say, your property goes up 10%, you pay the mortgage down 10%, that's going to give you that 20% buffer. So the guarantor's property is no longer, required. So we can release that from the equation. But yeah, definitely talk about that in more detail depending on individual circumstances. So just a bit of a picture there. I find this maybe is a bit more applicable to grandparents sometimes, but when buying stuff for yourself, you're a bit unsure or difficult to make a decision. But when it's for the kids or potentially grandkids, if you're lucky enough that maybe your parents act a bit like that and quite free with throwing them cash around, then you'd be in a great position, for a potential guarantor. So who else do you need when buying a property? So there's obviously some other professionals. My predominant role is around the home loan, the borrowing finance side of things, but there's definitely other professionals you would need to liaise with and engage throughout the process. So, excuse me, I'll just touch on them very, very quickly. So there's obviously real estate agents. You need to liaise with agents, maybe talk about the type of property you're interested in. Even you can give them an idea of what your price range is, so they can certainly try and help you find the right property for your, obviously for your needs and circumstances. A solicitor or conveyancer, so they're the ones that would provide you with all the legal advice around buying a property and signing contracts. They'd take care of the legal process to transfer the ownership from the property from the previous owner to you. Once you find once you have purchased a property, they deal with all the legal side of things. Pest and building inspectors, so often that's voluntary. It's not a compulsory requirement, but if you're going to be spending large amounts of money on a property, getting a pest and building inspection done to make sure there's no surprises, you may need to liaise with those people. And then also insurances. So obviously having home insurance. Most banks require you to have the house insured before you can actually settle on it. But then there's some other insurances to consider, like maybe life insurance or income protection. So if you're going to take on a home loan and you just want to maybe make sure you're protected in case, fingers crossed, you'd never need it, but if you got sick or injured and couldn't work for a period of time, you don't want to potentially lose your house on top of maybe a sort of traumatic event that may arise. So current government grants that are available. So this is Victoria, sort of state of Victoria focused. So a big one at the moment is this first home buyer guarantee scheme. So I mentioned earlier that the minimum deposit would be sort of that 7 or 8%. Obviously, the more the better. But under this first home guarantee scheme, you can effectively have just a 5% deposit. So you don't need 7 or 8%. If you had a 5% deposit, that is sufficient under this first home buyer's guarantee scheme. So there's a limited number of those. I think there was 35,000 released for this current financial year. I know that there's definitely still some available as of sort of March or early April 2023, because I've had quite a few clients that have been lucky enough to secure those places, so still available at the moment. Stamp duty concessions. So generally as a first home buyer, if you're buying a property below 600,000, you'll have an exemption from paying stamp duty. So stamp duty can be a large expense. If you're a second or third home buyer, you'd need to pay stamp duty. So it can be sort of anywhere between maybe around 4 or 5% of the property's value. So it's a large sum of money that you need to pay on top of a deposit. But as a first home buyer, you can be exempt from the stamp duty costs. And the first homeowners grant. So this has been around probably for a long time in a few different formats, but as of today, it's a $10,000 grant, but it is for new properties only. So you have to either be sort of building your new home, your first home, or maybe if you're buying a townhouse or a unit that's just been built, never been sold before, so brand new, then that first homeowners grant can potentially be eligible under those circumstances. So I'll skip through the poll that we did on the night. So why even bother owning your own home? It sounds a bit complicated, sounds a bit confusing, sounds very expensive. So why even bother considering? So there's definitely a few reasons. One is that you'd certainly never receive or no more letters in the post saying that you need to move out in 60 days, or potentially a letter in the post saying that your rent's gone up $20 or $30 a week. I know we received a letter that we needed to move out, I think on the 20th of December one year. So that was a Merry Christmas to us, that we needed to pack up and try and find somewhere else. So a big one is that it provides you with some long-term security for you and your family. So you're not going to have to worry about moving out. You own the property. If you want to make some improvements or changes to it, you're obviously free to do that. You'll be paying down your own mortgage and not someone else's. You may have heard that saying quite a bit, that when you're renting, rent money's dead money, or you're paying off someone else's mortgage, which is not always entirely true. If you're renting but using your money elsewhere, that's perfectly fine. But it does build equity and wealth over time. So hopefully over time your property is going to go up in value. You're going to pay the mortgage down, which is going to create some equity, and it just gives you some options then. So you can look to sell that property and then move to, whether it's a bigger home or a different suburb or different area that you want to live. You might decide that investing in property is something that you're interested in. So once you build up some equity, then you can use that equity to buy another property. So it just really does open up some options to try and sort of build some longer term wealth and security for you and your family, if that's what you're looking to do. So coming towards the end now. So just, what's next and why iSolve Finance? So basically we have a client for life philosophy. So once you come on board with us as a client, we're always here for you for ongoing advice with regards to anything sort of home loan or finance related. So we have access to over sort of 30 different banks or lenders. So depending on what your situation is or what you're looking to achieve, in most cases, we're going to have a solution there somewhere for you. And we keep in touch with you over a longer period of time as well. So as a bare minimum, every 12 months, we touch base with you. So how's everything going? What's your circumstances? Let's have a look at your home loan interest rate and see if we can make that a little bit lower for you. If that's something we can do. We always talk to your existing bank to try and save you a few dollars on the interest rate, because often your home loan is your biggest monthly expense. So any bit of savings that you can make there makes a huge difference over time. So if you just walk into your local bank branch, they would show you their 3, 4, 5 home loans, which might be okay, but they might not be the best for your situation. And I don't think I've ever heard a bank ring one of their existing customers and say, look, we've got a lower interest rate at the moment. I'm going to reduce that for you. So it's just not the way the bank branches operate. So if you do want to book in a time, just have a chat about your individual circumstances. There's a QR code on the screen there. COVID should have showed us all how to use those. If you just bring out your mobile phone, it should bring up a calendar where you can just book in a time to have a bit more of a detailed chat with me about your situation. So no obligations, no costs at all. We can just have a chat, get a feel for where you're at, ask sort of any more specific questions that you might have, and see if we can get you on the right path to try and own that first home. And I actually forgot to mention this at the start, but as a very final, just a thank you gift for watching the presentation, or for those that attended on the night, we've got a thank you gift there. So we run these holiday competitions as sort of part of our, marketing, and as a thank you to our existing clients twice a year. So the holiday we're running at the moment is a 9-night holiday to Greece. So again, if you'd like to scan that QR code, you can pop your details in and enter the competition. Again, no cost or no obligations at all, but you've got to be in it to win it. And if you do decide to book in an appointment to have a one-on-one chat with me, you'll get an additional entry. And anybody that does, use our services, or we're able to help you with a home loan down the track, you get additional entries into that competition as well. So that brings us to the end of the presentation. So that's the shorter recorded version. So I hope that was valuable for you. Hope you got some helpful information. It wasn't information overload. But yeah, best thing to do would be to reach out, have a chat one-on-one, ask any questions that you might have, and I'm always more than happy to try and answer them, help you out, or point you in the right direction. So thanks so much for watching, and look forward to maybe talking soon.